Hello there, this is fairbinaryoptions.com and we are looking at the US dollar Swiss franc in a rather bullish price action, and I would like to explain a bit why I favor call options on the pair with 2 days until end of year trading and with this light environment ahead of us. But let's first write here that this is fairbinaryoptions.com and then to look at the US dollar Swiss franc. Now the US dollar Swiss franc, in my point of view, ended or formed an impulsive move from here to the highs here. So from this moment of time until this moment of time in here, we have a first wave. Now if this is the first wave of a bigger degree, then we're looking for the second wave. So this would be the first wave, and then we're looking for a second wave of the same degree, and most likely it's done here, or it will be done around this moment of time. In terms of Elliott waves, how can we label this corrective wave here? Well, I would say, let me take a polyline from here, and I would say that it goes with this to be an A, B, C. Then as you can see here, we have 3 different smaller legs. I'm talking about this A, B, C in the form of a zigzag, and now we have another A and the B and the C. This is being called a double 3 pattern, a corrective pattern, a complex corrective wave for the second wave, and it should be followed by a third wave. But because the first wave here is so strong, then I would look for the third wave, so the whole 1, 2, 3, 4, 5 pattern to be a first wave extension. But in order for this to be a first wave extension, it means that the third wave should peak or should end around 61.8 when compared with the first wave. So the logical thing to do is to measure here the length of the first wave, to take the 61.8 level, and then to project it to the upside from this moment of time. Let me change the color, let's actually make it a bit bigger, and then to project it to the upside by the moment that the correction is ended, and the correction is ended here. So this would be 1, 2, and then the third wave should go above parity. And with that, I rest my case, because after the third wave, we should have a small fourth wave in the form of a triangle of a lower degree or stuff like that, as the second wave should be the most time consuming. So a small fourth wave, and then the fifth wave to go, but the fifth wave not to be longer than the third. So it should go with a fourth wave, something like this, and then the market to go for the fifth wave. So I would say the whole move, the whole impulsive move, would peak around 101, as I'm not interested to be long anymore at that moment of time. But we are trading binary options here. So what I would like to do here is to buy call options, and the expiration date should be end of month and end of week expiration date. End of month would be this Wednesday, so 2 days from now, and end of week should be this coming Thursday, as the market should either still consolidate here, but with the tendency to still break higher, or to just explode higher for end of year trading. So I'm buying call options with end of year and end of week expiration date. Thank you for being here. This is fairbinaryoptions.com, and we just look at the US dollar Swiss franc in a bullish impulsive move. Thank you, and bye bye.